All right, first ever stream, and we are ready to go. It's K Trelly AP, and I'm streaming for the first time. If you haven't already, subscribe, sub, however this works. I don't know. But we are going to. This is the first stream that I've done. It took me a while to set it up, but this is going to be a every weekend thing. I'll probably be doing this every Saturday night, or I'll figure out a real schedule. Uh, Late night at the office, as you can see. Uh, so we're gonna talk about life insurance. This is about life insurance, boom. But we're gonna make it fun because it's late at night. But that don't mean we don't get to talk about work anyway. So boom. Just for the people who are brand new to life insurance and who don't have any clue, I mean the slightest clue on what it is. Um, here is the most basic term. The most basic definition. When you die, the people you left behind get money. Simple. Boom. Now you know life insurance. You're an expert. Big brain. Just jokes. But on a serious note, when you start to, it's really simple, but it's not easy. So whenever you really start to dig deep, there are many different types of life insurance. There's many different products, and I'm going to use this stream. I'm going to use these weekly streams to really go deep, so that we can understand the differences of which ones are better for you, which carriers offer different products. We're going to dive into different carriers. We're going to talk life insurance. We're going to talk money. We're going to talk getting rich. We're going to talk a whole bunch of stuff. Okay. This is the office. We still at the office. So that means we going to be making money. Until we leave this office, that's when we stop making money. But as long as we in this office, we still making money. Okay. Wanted to be a little bit lower. All right. So as long as we still in this office, we are still making money. Money, money, money. Money, 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 money. Money. Yeah. So, shout out to my YouTube. Shout out to Twitch. Shout out to Kick. I love y'all. All right, we're gonna start. So, first and foremost, we're gonna start with the most simplest term. Boom. I wish I had. I'm gonna get a whiteboard for y'all so that I can start writing stuff on there. But first and foremost, hold on, guys. Let me edit. Hold on, because I'm a vertical. My dogs. Hold on. That's what I need that. Full screen. Boom. That's what I need. Alright. Alright, cool. So that wasn't even for y'all. That was for my vertical. Whenever y'all see it, go back and watch this on my socials. But this is what we're gonna do. Back to what I was talking about. Term. Alright? There is a term life insurance product. It can range, we'll go over specific examples, but it can range on varying different levels. The lowest that I've seen it go is 10 years. I do not quote me on this, but I do think it can go as low as 5 years. And fun fact, as a life insurance agent, the smaller amount of years that that you write a term, so the range goes from, let's say it's 5, right? The range goes from 5 to 35, right? So it goes 5, 10, 15, 20, 25, 30, and then 35. So that means any given policy that you write, So as an agent, let's say you write a 10-year term. That means that that policy from the day that you submitted it and it got issued, that means that that policy is going to expire 10 years from that date. So that's what I mean by term, and that's when I say these numbers. So anybody that's confused. Um, Pretty much. Fun fact about it, like I was going into it, whenever the lower amount of term that somebody writes, right? The lower amount of term. So on the 10, 15, if it's a smaller amount and if they're older in age, so like the 80-year-olds, 70-year-olds, 60-year-olds, there's a very high chance that you're going to get a smaller commission with a lot of carriers. And that's just because I'm assuming that they're assuming it's it will be a high chance of lowering your persistency rate. For the people who don't know what persistency is, but persistency is how many policies you have that last longer than a year. So that's a persistency rate. Pretty much, how many times do you not have chargebacks? So if you, yeah, that's as simple as, for the people who don't know chargebacks. Chargebacks are a refund. Pretty much, if somebody canceled their policy or stopped paying their policy before that first full year, then they're gonna refund your commission because we get a loan. The best way I can describe it, it's advanced commission. In advanced commission, we like the rappers, okay? So they give us an advance. They give us it depends on how much they're paying a month or what type of policy it is. But because if it's an annuity, it depends on how much they're putting in the annuity, and if it's a regular policy, it depends on how much they're paying every single month. So it really just depends, but nonetheless, we like the rappers. We're the rappers of the finance industry, okay? They giving us an advance check, okay? But they're anticipating that they're going to recoup on that advance check, okay? And if they don't recoup, that means they're going to come to us and we'll be like, hey, brother, we need our money back. We need our money back because you didn't do good business. So that's what a chargeback is. That's what a refund, and I hate the stigma about it. It's like anywhere you go, any business you run, imagine telling, I said this in one of my videos that I haven't posted yet. Y'all will see that soon. But literally, and this is one of my favorite analogies, the way I think about it. Imagine you go up to a restaurant owner, right? And then you tell the restaurant owner, or somebody who loves restaurants and that's his dream. Imagine you going up to him and telling him, don't start a restaurant. Restaurants are a scam because people are going to want refunds on food that they think is nasty. People are going to want refunds because a roach was in their food or something. Or a piece of hair was in their food or something. People are going to want a refund for that. So don't start a restaurant business. Like imagine telling, that's how y'all sound to me whenever y'all say, oh, tell them about the chargebacks. Tell them about the chargebacks. Bro, I promise you they're not that bad if you have, one, good training, and if you do good business. I promise you. My chargeback, ever since I've been in the life insurance industry since 2023, June of 2023, and my chargebacks have never been more than 20% of anything that I wrote. So, but I was always trained to expect 30%. So, I mean, I think that's a win. Y'all take it. Y'all might think it's a scam. I don't really care. But that's term in a nutshell. I know we kind of veered. We went everywhere. We went crazy, but that's term in a nutshell. It expires. So typically about the term policies, they are usually the bigger amount. So if 9 times out of 10, it's safe to assume if somebody isn't a millionaire or making lots of money, or have big 401ks, if you know somebody's not in a great financial position, but they come to you and be like, "Oh, I got 300,000 in life insurance." 9 times out of 10, it's probably a term life insurance policy. Okay, there's nothing wrong with term life insurance policies. They just have their place. Okay, so like specifically, they're really great for mortgages. So, and I'm a specialist in mortgage protection. So this is kind of like really my thing. This is the main thing that I sell. But I also sell annuities and I sell IULs. But we can get into that later. And I sell them all. I also sell final expense. I sell it all. But um, pretty much is really popular in the mortgage protection space just because they're great for mortgages. So if you have a 30-year mortgage, you can get a 25 you can get a 25-year um, a 25-year term that covers the mortgage. Let's say your mortgage 500,000, you can get a $500,000 term for 25 years. Um, that's return of premium. Make sure it's ROP. And then if it's ROP, once that 20-year term is up, guess what? At the end of the 25 years, you get all the money that you've been paying in there and a check right back to you. So then you can take that money and pay off the rest of your mortgage and you good. Now you just paid off your mortgage 5 years early. That's what I've seen a few people do that. Um, but just in general, even if you don't do that, you can get a 30-year term. If your mortgage is 500,000 and it's a 30-year mortgage, you get a 30-year term, 30-year mortgage for a 30-year term for a 30-year mortgage for a $500,000 mortgage for a $500,000 term. Boom. Now, if anything happens to you within those 30 years before you pay off that house, whoever you leave behind gets a $500,000 check to pay off the mortgage. They don't have to worry about the mortgage. And obviously, I've seen like literally, was it yesterday? Literally yesterday, I quoted a lady, and um, for her mortgage was for 560,000. I quoted her for 560,000. I quoted her for 1 million, and I quoted her for 1.5 million because she wanted to look at options to leave something for her family, and she also wanted to look at if she could only cover a mortgage. And so there are people that I think her mortgage was 28 years, and she was going to get a 30-year term. But literally, that's it. Like that's literally it about terms. They're really good, but they allow that flexibility of like peace of mind, but allowing more to be covered. Because with a lot of, and I'll get into the whole lives, which is like really vogue in the IULs. Um, but nowadays, it's a really great option, and it's not. Of course, the term isn't going to be the best choice for everyone, but obviously, but with life insurance, one size doesn't fit all, so it doesn't matter. Got my mouse. One size doesn't fit all, so it doesn't matter. One size doesn't fit all, so it doesn't matter. So, um, whatever you, we'll go to. I'm tired. I've been up since 6 a.m. and it's 11:30. But yeah, so whole life. Oh, 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 oh. I feel like Wolf of Wall Street. Oh, 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 oh. You know that one? Oh, oh. Um, so whole life, whole life, whole life, whole life, whole life. Whole lives can be called a different thing, a bunch of different names. They can be called burial policies. They can be called guaranteed issues. They can be called final expense policies. Those are all the names that I've heard them be called, but they're all generally the same product. Okay, it's all generally the same product, all generally the same name for the same product, except for like guaranteed issue. They just have little nuances that are a bit different. Um, except for final expense and burial, they're pretty much the same. It's the same thing. Two names for the same thing. Depends on who you talk to, will determine on which one you hear. But these are great situations. I got to bring it back to the mortgage protection space because that's where I specialize in. These are great for situations if you have a mortgage, but you can't necessarily afford the full mortgage coverage. We can at least get you something that covers a year, a year worth of payments, 2 years, 3 years um, worth of payments, so that gives you, whoever you're leaving behind enough time to figure out if they're going to sell the house, if they're going to stay in the house, or at least just give them time to grieve, you know. Um, so I really like these policies just because the majority, unfortunately, and I hate to say this, the majority of people getting life insurance have waited too late to get it. You know, the best people that I love to talk to, I love to talk to the people that say, that are 75, and they say, and I call them, and they say, hey, I already I got a $200,000 life insurance policy with, back when I was 21. So I don't need this. I love talking to those people, okay? Because that is when you get life insurance because they've been paying $30 for their whole life versus if they were to get that same policy now, it would legitimately be like $800 a month at 75 for the same policy for the same amount of coverage. So it would, and that's not even an exaggeration. Um, and the only policies that are better than that, and I just heard somebody tell me this the other day. She was a lady. She was 40. She goes, "Yeah, I already got life insurance. I've had a policy since my parents got me a policy back when I was just born. They got me a $200,000 policy back when I was born." And I was like, "Wow, we love big brain people, big brains, okay?" And I wish everybody was like that, but the problem is everybody is not like that. Um, So the majority of people do wait way too long. They wait way too long to get life insurance, and then they're having to hark out more money for a smaller amount of coverage just because they waited too long. But these are great, and that's why I love these policies because they provide you with the best option. Because, again, for those people who did wait too long, so that you at least have something that's not going to scream and tear apart your pockets. So, like for instance, one of my clients, he just got the annual premium. The AP was 5,300. It was a little over 5,300. But we'll just keep it simple and do 5,300. What was the coverage? What was the coverage? Hold on, let me look up the coverage. Let me look up the coverage real quick. 20,000 dollars in coverage. 80 years old. Okay, 80 years old. He got $20,000 in coverage, and I can pull up. I forgot how much his mortgage. I think his mortgage was like $900. Uh, Social Security was 1,900. How much was his mortgage? I can't. I thought I was gonna be able to find his mortgage, but I guess not. Um, I'm pretty sure. I don't know exactly, so don't hold me to it. But I'm almost certain it was only like 900. It was only like 900 a month, and he still owed. That was on because the house was originally paid for, but he had gotten a refinance, and it ended up for a small loan, a smaller loan. It wasn't like a big triple digit loan. It was 5 figures. It was 5 figures, a little bit over 50. But he wanted to get, because whenever he was gone, his son lived in the house with him, but he knew that his son was going to want to stay in the house. So he says, um, so he wants to help out his son, obviously pay off the little bit amount of debt that he had got back again. And so uh, I've been up since fucking the crack of ass. But literally, he was able to get almost half of the mortgage payments, almost half of the mortgage loan, because it wasn't too much over. His mortgage amount wasn't too much over 50, so he got sweaty. He got a little bit under half. So his son was gonna have the mortgage was gonna be paid for a very long time, at least for 3, 4, 5 years. So he didn't like that. I'm brain farting right now, but that's why I love these policies, just because they provide a great option, especially for our grandparents and our older parents that may have been through. Like, I'm not gonna drop his info, but it allows, especially the GIs. I love the GIs. Some people don't like the GIs. It's a little bit of controversy, but um, GI, for the people who don't know life insurance, GIs is short for guaranteed issue. Guaranteed issue pretty much means everyone gets approved, but with a lot of insurance companies, they have a whenever they write these policies, they have a caveat like you have to live for a certain amount before this policy, before they give you the full amount of the policy. So let's say with one company the GI is a year. So they're like, hey, you can write this policy, but um, in order for you to get the full death benefit, the full 20,000, you have to live for at least a year. And if you don't, then you just get all the money that you've been paying back. Your beneficiaries just get all the money that you paid into the policy. So that's the only caveat about GIs, but everyone gets. Um, these are for the people that are a little bit older, struggling a little bit with their health. Maybe you've had cancer. Maybe you have uh, maybe you've had real live diseases and came back from them, or maybe currently taking medication on like, or just had really big surgeries, and like these are like people that are a little bit higher on the age side, a little bit more seasoned, but also combined with um, they're a little bit more seasoned with the health conditions or have a history of have a extensive medical condition history. So that's usually the main people for GIs. That's one type of whole life. Um, another type of whole life is just the regular final expense. So these are a lot of the. It depends on the carrier that your life insurance agent uses. So um, like some of them cut off at 60. Some of them start at 60 and then cut off to 85 or go up to 90. It depends. It really just depends on the carriers. Like I have some carriers that cut it off at 80. I have some carriers that cut it off at 90. I have some carriers that cut it off um, that start at 40. So it just depends. It just depends on the type of carrier, but typically these are the policies that people are like they have cash value. Um, you can take loans out of it. You can be your own bank. These are typically these policies you can do that stuff with, but whenever people are talking about that, they're really talking. They're going with the popularity and vogue of IULs, and beware of IULs just because um, they'll. A lot of people will try to be. Uh, you gotta make sure it's set up right. I'm not even gonna pretend like I know how to set up an IUL, but I do know this. It's the same thing with life and anything in life insurance, brother. Not one size fits all. Okay, so if anybody's, this is the best way to set up an IUL for this. No, it's just probably the best way to set up an IUL for this person specifically. Okay, it's not for everybody because everybody's going to be at different income levels. Everybody you talk to is going to be in different family situations. Everybody's going to want to have different goals. You might get with a construction, not a construction, but a builder, and he might want to have an IUL that he can fully fund and then take money in and out and use as his own loans to as collateral to build up for his projects. You might have another person who's just who's a 20-year-old and wants to start saving up for has a pretty good stable job and wants to just start saving up for retirement and wants to deal with the wants their money to grow with the stock market but doesn't want to lose any money like the 401ks, like the people that got 401ks. It depends. It depends. It depends. It depends. It depends. It depends. Remember that word. Get it tattooed. Whatever you got to do. It depends. Everything in this life insurance industry depends. And I hate people that try to blanket stuff, or I hate companies that try to blanket stuff because not there is no one size fits all in life insurance because we're all different. just by definition. Everyone's going to get different prices for the same thing because everyone's at different medical conditions. Everyone's not as healthy. Everyone is doing something. Like this person might not do anything, might have live a healthy lifestyle and everything. This person might be the opposite. So don't ever think it's a one size fits all type of deal because it's not. I don't know how long have I been doing this? 30 minutes. Okay, bet. Go another 30. But yeah. So there's that, and then so we've covered final expense. We've covered IULs. IUL officially is short for Index Universal Life Policy. Pretty much what I just explained is basically all it does. It does all of the same stuff that the whole life policy does, or final expense policy does, but with the other stuff added on. And then we have annuities. So annuities are great for people that want to retire. They do the same thing as IUL. So your money goes up whenever the stock market goes up, but it also um, stays stagnant. So whenever the stock market plummets, like in 2008, your money doesn't plummet. Okay, your money just, let's say your money was right here. Your money does what? It stays right here. Okay, and then whenever the market recovers and goes back up, guess what your money does? It goes up with the market. So it does the same thing as IULs. Annuities do the same thing, but it's mostly for retirements. Most of the people that are getting IULs, they're moving big chunks of money. So maybe money that they have in 401ks, retirement funds, savings accounts, and they're putting that money into um, yeah. So uh, like 401ks. Um, they're basically for people who want to use it to retire. Their annuities are really good for withdrawing money, take it, for people that want to live on it and they give out payments, but there's the money that's still in there still gets to grow with the market. So annuities are great, but a majority of the people are um, the more seasoned folks, the more retired folks, the more or people that are getting ready to retire. Those are great products for that. So it really just depends on where you are and what stage of life. But so that's for the products, okay. And next week I'll compile a bunch of different products from all of the carriers that I'm licensed with, and then we can kind of just I'll break a bunch of them down. Like I'll just boom, 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 so that y'all can see the ins, y'all can see the outs, y'all can see the roundabouts, y'all can see all of the crooks and crannies of each single product and each single nuances, so that you can really truly understand. Because I feel like there's not enough transparency between the agent and the client, and I just feel like, why are we trying to hide? Like, because I feel like it just makes our job easier. Like, because then people really, really and truly get to understand that it actually is a by person basis. Like, not one policy fits you. Not the policy that fits your mama fits you. Literally, it can be completely different. Um, there are some things that I do want to touch on. Okay, for some reason, and I hate this. For some reason, people, this is the biggest myth in the life insurance industry, or just misconception, or the thing that people don't realize. Brother, brother, you can legitimately, okay, let's say we got a family of 5. Let's say we got a generic family. We got a mom, a dad, and then 3 kids. Brother, sister, brother, okay? Let's say we're all grown at this point. Mom and dad are 50. Mom and dad are 50. And then brother, sister, brother are, let's say they're 30. Let's say they're 30. They were 20 years. Or let's say mom and dad are 60. And brother, sister, brother are 30. Okay. Here's what I would do if I was brother, sister, brother. Okay. If I was the firstborn, I would get my whole family together. I would call everybody on the phone. I would call mom and dad, and I would say, hey, mom and dad, I know we are not planning for you guys to death this soon, but we need to have a peace of mind in something, because anything can happen. We can't predict the future. So here's what we're going to do. If y'all, and this is, I'm just going to pretend like they don't already have life insurance policies. Y'all are going to go get life insurance policies, okay? And you're going to put all 3 of us as beneficiaries, all right? So that's what mom and dad do. They go get life insurance policies. Let's say those policies, let's keep it modest. Let's say those policies were $20,000, right? Each. So mom has a policy on mom for $20,000 in coverage. And then dad has a policy on dad for $20,000. And when I say that, I mean mom owns her policy on herself for $20,000, and dad owns his policy on himself for $20,000. Okay, so now when you combine that, that's $40,000 total. All right. But here's the key, right? So here's where it starts to get really, really nice. Mom and dad get together and say, hey, dad goes, hey, I'm going to get a policy on mom. So now dad owns a policy on mom, okay? Let's say he gets the same amount of policy for $20,000. And let's say mom does the same thing to dad. Mom now owns a policy with dad, on dad, as the insured. So now total, each person, whenever each person goes, they just doubled it. Now they got $40,000 in coverage. Shout out to Pump Pig. W's in the chat. But so now that's $40,000. So now you just went from a measly $20,000 to 40K between both people. If you combine them totally, now it's $80,000 total. So God forbid you lose both your parents, y'all don't have to worry about money at all. It's $80,000. And this is not about getting rich on people's lives. This is about buying peace of mind. That's what this is about. This is about planning for what's guaranteed for everybody. Like this, I hate when people try to make this a weird thing. We all know where we're all going. It's one of the only things that's guaranteed in this life, okay? Now, keep in mind, I'm just getting started, okay? That's mom and dad, so stay with me. Mom, so now mom now has $40,000 in coverage now between the policy that she owns on herself and the policy that her husband or dad owns on her, okay? And then dad has $40,000 in coverage with the policy that he owns on himself and the policy that mom owns on him, okay? Boom. Now this is where brother, sister, brother come in. Brother say, hey, sister, brother, we are all going to get policies on mom and dad, okay? Now let's say they match it. Let's say, brother, sister, brother, 3 policies, get a policy all on mom for $20,000. So now they own policies all on mom for $20,000. 20,000 times 3, that's 60,000. Okay, stay with me. It's quick maths. That's 60,000. Now you add that to the $40,000 that the $20,000 that mom got on herself, and the $20,000 that dad got on mom. Now how much is that? 60 plus 40. You do the math. That's $100,000. Whatever. Your family is getting $100,000 on one person. If you lose one person. Okay? That's where, like, this is where, and if you do that same math on dad, we do that same math. So brother, sister, brother, all get policies on dad. $20,000 each in coverage. That's $60,000 total between all 3 of them, and then you add it to the $40,000 between the $20,000 in coverage that dad has on himself and the $20,000 in coverage that mom has on dad. Okay, that's another $100,000. So between, and we haven't even gotten to policies on the kids yet. Between mom and dad, it's 200. It's 200 grand. That's 200 grand in life insurance money. And I think this is something that a lot of families could really use, especially if you get this early. Especially if you get it early. Especially if you get it early. Let's say your mom is 45 and you're 25. Your mom can still get a whole lot of coverage for cheap or cheaper. And y'all can really just play the game, bro. And that's where, like, if you add the kids, mom and dad both got policy on older brother number 1, and then sister, brother all got policies on brother. And because he's younger, it's going to be cheaper and they can get more because he's only 30. So 9 times out of 10, a lot of those policies ain't even going to be, like, you could really legitimately get like 80 grand, 90 grand, and those policies don't even break y'all pockets. And so, like, depending on people's health levels and health conditions and what they're doing, you can really for like $150, $200 a month, y'all can really, depending on how big the family is, y'all can legitimately have like $300,000, $400,000 in life insurance coverage total as a family. And maybe not for you guys. Well, it depends on how y'all do it. Because keep in mind, y'all getting, these are whole life / IULs or whatever y'all decide, maybe annuities. Keep in mind, these policies are accumulating cash value. So they're growing. I don't know if y'all seen it. If I can find the video, I'll find it. Let me see if I can find it. But it was I think he was a lawyer or an accountant, and he was using life insurance to pay. He was using life insurance to pay his son's college tuition. See if I can find it. I hope this is not lagging super bad. Lawyer pays for college tuition with life insurance. Was he a lawyer? It was on TikTok. It was a long time ago. And he went super viral. I'll find it. I can't. My YouTube's running too slow. I don't know. Figure that part out. Yeah, it's running too slow. Forget about it. But where's my chat at? Shout out to the chat. Shout out to the chat. Chatter McChats. Chatter McChats. But let's stop recording now. Pretty much, like literally, I'm just gonna explain it and then I'll find the clip for next time. But literally, that's literally what he did. He literally, cause he got it for his son whenever his son was like, I think he was like 4. I think that's what he said, and it was like 100,000 or 200,000 policy. Cause I know, whenever you get them for like little kids, you can have by the time you can fully pay off. You can pay $40, $50 a month and have their policy fully paid off, and it'd be like $100,000, $200,000 policy. These are real life policies that literally I've seen done. Literally that I also have written. So, but that cash value is in there. So by the time they turn 18, 20, they want to go to a big university. You take that money out. They can use that to pay for their tuition. They can use that to pay for loan, because keep in mind that's not restricted like the student loans. That ain't restricted like that. It's not restricted like the student loans. Like the student loans, you can only use it towards tuition. You can only use it like specifically for that. So specifically with I'm sorry guys, I'm super distracted. I'm trying to pull this up. Yeah, it's not super complicated. Um, so that can be like a real tax-free check that you use for your kids' college, and then keep in mind, it's your money. It's the cash value that you built up in that policy for whenever they were young. So if you don't pay it back, it doesn't matter, because it's your cash value. It's your money. And the interest rates on a loan from life insurance companies tend to be a lot lower than if you get them from a bank and sometimes from the government, from Uncle Sam. So that's really all it comes down to. Whenever it comes to whenever it comes to stuff like that, like life insurance can really be the door that opens it up. I might talk about probably in the next one. I might talk about like getting in the actual industry, but I don't like talking about it because there's so much controversy. People be like, "You're a scammer. You're in a Ponzi scheme." No, you're not in a pyramid scheme. First of all, let's look up the definition of a pyramid scheme. You know, and here I go again. See, this is why I don't like getting into it because then I get real passionate about this part because it's like it's almost like sometimes like I'll always respect somebody that uses pyramid scheme is a business model which rather than earning money or providing returns on investments by legitimate products to an end consumer mainly earns money by recruiting new members with the promise of payments or services. So, literally, word for word, bar for bar, the definition of a pyramid scheme is a business model which, rather than earning money or providing returns on investments by sale of legitimate products to an end consumer, it mainly earns money by recruiting new members with the promise of payments or services. Listen, how can I be in a pyramid scheme if I don't make any money on anybody I recruit? Like, it'd be different if I got like $1,000 every time somebody joined, or somebody paid me $1,000 and I got half of that. It'd be different. Then I'd be in a pyramid scheme. But I wish they paid me for getting people on. That's why I haven't brought anybody on. I would be bringing people on if they paid me to bring people on. No, I sell life insurance. I sell policies. That's how I make money. Why? Because they paid, and they pay really good. So I'll probably focus next stream on more recruiting, or just getting into the industry in general and teaching all the ins and outs and the good, the bad, the ugly. Because this industry does suck. There's a lot about it that does suck, and I'm not gonna sit here. I will never lie to y'all. Okay, I'm gonna tell y'all what's up, and I'm gonna tell y'all what's good, what's bad, what's ugly, what's like. For instance, I wrote a GI. I wrote a GI last week, right? And guaranteed issues, because they're for older people and most of the people get approved. Just in general, any guaranteed issue product, 9 times out of 10, you are going to get a smaller commission for it. Okay, but my premium was for 5,300. It was a little over 5,300. I don't remember the exact number off the top of my head, but it was 5,300 the annual premium. My commission was already my commission on that product. My commission in general was 80%, but my commission on that product, because it's a GI, is significantly lower. Okay, so I got 45% of that, but it was still 5,300. So you do the math. 45% of 5,300 is a little under 24. It's about 2,400. So it does pay, even on products that are um, even on products that are like super low with commission. 45% is a super low commission. Like, imagine if I would have sold a regular product that wasn't that didn't have conditions of someone had to live for a certain amount of time. Imagine if I would have sold and got my regular commission at 80%. You do that same math on 5,300. 80% of 5,300. Y'all do the math. I don't know how much is that. That's 4,200. So the minute that that person pays, you get a direct deposit of 4,200. Like, this industry does pay, and it pays very well. You know, you not you make yes, you make money on people. You make money on by teaching people how to sell policies. Okay, you don't make money by recruiting people. You make money by teaching people how to go and sell life insurance. Okay, because that's the only way you get an override. That's it. You don't get $10 every time you recruit a new body. As a matter of fact, no one pays. You don't even pay to join the agency. Anybody selling you courses, that's their personal brand. That has nothing to do with whatever agency that they work with. But there are some agencies in the space that do charge you to join. I know because whenever I first got in the industry, I joined in IMO. And IMO is what they call the companies that sell the products for the insurance companies. Okay, that's what an IMO is. It's short for Insurance Marketing Organization. It's an IMO. So I joined in when I first got in the. Whenever you first get in the industry, there's two ways you can go. You can go completely independent, or you can go the IMO route. Okay, there's pros and cons to both. Both suck in their own way, and both are amazing in their own way. Okay. Um, if you go the independent route and you try to go straight to carriers, you're gonna be one by yourself. There probably will be no system. And 9 times out of 10, every time that I've seen evidence of this, they always, especially whenever they're first started, their contracts are always a lot bigger. So usually they range anywhere between 120% to 145%. But they also usually only start with 1 or 2 carriers. It's just because it's limited. Like, a lot of carriers, whenever they, in order to trust you with their license, they want you to come with big business. If you are completely independent, if you don't have anybody backing you, if you don't have a record label backing you, we're going back to rappers. Life insurance agents are rappers in the finance industry. Okay, if you don't have a label backing you, a lot of life insurance carriers are not going to back you. Or radio stations are not going to play your song because if you don't got a label backing you. Spotify is not going to push your music because you don't have a label backing you. Like, those are life insurance carriers or Spotify and the radio and all those things. That's so funny. But because now that I said that, I'm going to be using it all the time. But so that's about the agency. So, and it does take a little bit longer. It takes 30 to 60 days to get contracted because they're vetting you. A lot of the carriers are vetting you. That process can be a big learning curve because you don't know anything, especially if you're completely brand new and getting into this game, right? Versus if you come into an IMO, especially if you do the research and find somebody that's a good mentor and a good upline, then that's going to take care of you and make sure that they actually teach you everything. Because I know the opposite, but we're not going to talk about that. It can really open up a lot of doors for you. Like, you can really, in general, have um, It really just begins with, um, damn, I lost my whole train of thought. But oh yeah, so when you got the record label behind you, the commissions, whenever you start in the industry, they can range anywhere between. I've seen it as low. When I came in the industry, I started with 30%, guys. And if you know the life insurance industry at all, it's terrible. That's a terrible rate to start at. Okay, but it can range anywhere between 30% to the highest. The highest that I've seen, like starting off, is like 115%. Is the highest that people are giving brand new agents. Um, so, especially if they were coming, especially from a situation where they were already making money and they didn't really have to start from scratch for real. So it really just but you get somebody that's gonna help you answer any questions that you have. You're not gonna all of the things. You're not gonna have to learn all the things on your own. You're gonna be taught. You're gonna be given scripts. You're gonna be given systems. I know there's some people that have. I've seen literal systems where there's people who literally their whole team, like 150 agents, every single day, Monday through Friday, are all on. Um, let's say 41%. They're all on Zoom every single day, and everyone is dialing and calling clients together. So brand new agents all the way to the agents that are doing 100,000 a month. So, and everyone's learning from everybody. It doesn't matter if you brand new. It doesn't even matter if you're on their team. I've literally seen this. So, those are some of the things that you can take advantage of if you come in with a label, aka an IMO. So, but you just really got to do your research but I can guarantee you this, just like any record label, not all, every IMO is terrible in their own way. Okay. Whether it's the admin process, whether it's some of the internal rules, whether it's the starting commission, there's something terrible about every IMO. But what's most important is that in general, you find somebody who you know is going to take care of you. You find a great mentor who's going to take care of you and who's going to personally see to it that you are successful. That is the main thing that I would tell any new person who hasn't gotten their license or um, or any new person who hasn't gotten their license or any new person that's looking at this industry. Do all the research that you're doing to get your license. Do 100 times more research, finding a good person who's going to give you great advice, who's going to make sure you make a lot of money, who's going to teach you sales stuff, who's going to give you access to training, who's going to give you scripts, who's going to coach you. Now, and then you reward your coach with the work. Don't come complaining. Don't come crying. Like, really come and work. If you really want to change your life, really come and work. I've been up in 6 a.m. I've been up since 6 a.m. It's Saturday. I got here. I'm not going to lie. I didn't get here till 9. I'm not going to lie. I will never lie to y'all because I'm not going to lie to myself. But, like, that's what you need to be doing, gang. You need to. Look at the time. It's midnight. I'm still here. I didn't stop calling till I stopped calling at 10. I didn't want to stop calling till 11, but I wanted to set up the stream because I got my first appointment from social media because I've been telling myself that I need to, no matter what, post every single day on social media, and so that's what I've been doing. And if you do that, if you reward your coach with that type of tenacity and just no matter what happens, I'm gonna be here. I'm gonna do it. I'm gonna make it work, even if I'm working a full-time job. I was working at Uber Eats. I would call people in the morning, sell policies in the morning, and then sell policies. And then deliver people's food in the night. Like, you just got to do whatever you got to do. It always will just come back down to how bad do you want it. This industry is like any other industry, and any other industry is like the social media, posting, being a streamer, being a content creator, being an influencer, being a running a drop shipper, being a TikTok or whatever, being a rapper, being a anything. How bad do you want it? Are you gonna be consistent with it? Are you gonna take initiative? Are you gonna would Are you gonna watch the new season of? I don't even know what new shows are out. The last like newest show that I watched. I don't even remember the last like new show. Maybe Peaky Blinders. No. I lied. The last like new show that like had like a new season ish coming out close to it was the Game of Thrones. Um, what is it? The House of Dragons. House of Dragons. Not Game of Thrones, but the House of Dragons. That I watched that. I'm not even gonna cap to you. I watched that like last year or 2 years ago. Whenever they were like really coming out with a new season, that last season when they had the worst season finale on the planet, but we're not gonna get into that. Anyways, like success and I hate. That's probably where a lot of the hate for this industry comes from. No. What are you doing? This is my cue to get off the screen, I guess. But that's probably where a lot of the hate in the industry comes from. It comes from that. It comes from because people glorify the success of it so much, and I don't think we do a great job at setting the realist expectations. Like the people that are at the highest levels, they're making the most phone calls. They're getting cursed out the most. I didn't call you. How did you get my information? I didn't fill nothing out. That's what they're going through every day, all day. And they're not taking no breaks. They're grinding every single day. That's what the people at the top are doing. No. It's not happy go lucky. Oh, I work an hour every 3 days and I made $1 million. No. Those people are working 10, 12-hour days. I'm seeing them. If you're not willing to work those hour days, then don't expect to be a millionaire in the industry, especially starting out. Come on, guys. It's great money, but let's use our brains too. I don't want nobody to be sorry, liturgical liberty. I'm not. I'm not buying viewers. I'm not that desperate. But I'll get it out the mud. I don't care. I don't care if I'm sitting with 2 viewers. I'll get it out the mud. I don't care if I got 0 viewers. Guess who's gonna be talking to? Me. I'm gonna be talking to me. Cause guess who loves me? Don't nobody love me more than me. And that's on God. But anyways, I think I'm gonna wrap this up actually on that note, because it's an hour and 10, and I'm gonna go home. I'm hungry. I haven't eaten all day. I'm lying. I've been snacking all day on like these little bars, these, little, these jumps. 10 out of 10 recommend. And then these little healthy cookies. 10 out of 10 recommend. They're fire. Um, If y'all have any comments, questions, or things that y'all want, probably next stream, I'm probably gonna do a deeper dive on specific products doing specific carriers. I'm not gonna name drop carriers because I don't like. The carriers have certain guidelines on social media and things like that, and being represented poorly. So I'm gonna use pseudonym names, and I'm gonna protect the carriers, but Um, as far as that, so the next stream will probably be more focused on that and just more teaching about life insurance. And then I'll probably do more of a deep dive on like getting your license, what states are the best, if you want to maximize scripts, whatever. I'm down for whatever, guys. Shout out to Pump Pig on Kick, and shout out to Baby Alexis 8v1. Thank you for the follow. On Twitch, and I don't think YouTube has done anything, but I haven't been watching it at all. I need to cap to you. I got the chat, so ain't nobody chatted, so. But that's it. It's K Charlie AP. If you want to sell life insurance, no. If you are still not covered with a life insurance policy yet, if it's 2025 and you still don't have a life insurance policy on you or your family or your grandma or your grandpa, maybe not even on yourself. Maybe you have coverage on yourself, but you want to get it on somebody else in your family member. I can do that. Okay. Hit the link, and I'm going to drop a link in the descriptions, or just go to my Beacons. Beacons, BEACONS.ai. BEACONS.ai/KTrelliAP, KTRELIAP. Or just follow me on Instagram, follow me on TikTok, Instagram, I'm on Twitter, I'm everywhere, I'm on Threads. Whatever is your favorite social media, follow me on it. And then, but specifically, well, I have links in all those bios except for TikTok because I don't have enough followers yet. So go to LinkedIn, give me the Beacons link. I mean, not LinkedIn. Go to Instagram, click the Beacons link, right? So this is my Instagram. And then what you're gonna do is you're gonna click that link right there. Right? 2 links will pop up. You're gonna click the KTrelliAP.com one. That's my Beacons link, right? So when you click that, this will pop up, KTrelliAP, and then those 3 links at the bottom are gonna pop up, right? So, if you have a mortgage and you don't have any protection on your mortgage, if God forbid something were to happen to you today and your family wouldn't know how to pay the bills or the mortgage, that's the link you need to schedule with. Okay. If you don't have a mortgage and God forbid you would lose your life and your family wouldn't know how to pay the bills or pay for your funeral, that middle link, get a life insurance quote here. That middle link, that's for you. This one right here. That's the one you schedule a consultation with. And then, if you're not interested in either one of those, but you want to make money in life insurance, you want to sell life insurance, you see people making commissions, and you're like, I want to see how they do that. I want to do that thing. Hit that 3rd link right there. Get a life and help others get one too. Join our team. That you'll schedule an appointment with me, and I'll let you know if this is the right industry for you to even join. Right. My name is KTrelliAP. I post almost every day. I post every day, and I'll probably stream around this time every weekend. But maybe I'll make them Sundays. Who knows? I love y'all. Y'all be safe. KTrelliAP out.